A little more now than a half hour till the opening bell on Wall Street. Joining us now on the markets, what Jay Powell's testimony today could mean for stocks. Sarat Sethi, he's a managing partner and portfolio manager for DCLA and a CNBC contributor. Seems like I talked to you maybe a couple of weeks ago, Sarat. We've got some important things. Since then, we've kind of been wait and hold, and it's all going to come at once. The floodgates are going to open with Jay Powell, jobs number on Friday, and then the inflation numbers next week. How are you feeling? Bullish, bearish, the same?
Yeah.
Stock picking?
I'm really looking. I'm a little bearish going into this, Joe. I think when Powell spoke in January, he focused a lot on disinflationary. Things were getting better in terms of the numbers coming down, whether it was CPI, PPI, inflation. And I think the data in the last really 4 to 6 weeks has been pretty strong. So, I think they're going to go higher for longer. And, Powell doesn't really care what the stock market does in the short term. So I do think people need to watch, especially for stocks that are higher valuation stocks. And that's where kind of sticking to fundamentals is going to be really important, I think, for the next 3 to 6 months, investing in companies that have true cash flow, that can grow earnings and are not pie in the sky or just long duration assets.
Do you expect hot surprises or cool surprises in the next 2 weeks?
I think hot surprises. I mean, I think the market is not really, poised for numbers to be hotter than expected. I don't think we're going to see a slowdown yet. And I think the market's going to kind of say, hey, wait a second, rates are, the terminal rate could be closer to 6%. And that could put, could spread some negativity, especially for people who have been long stocks. I mean, Joe, at this point, and you and I have talked about this for a few years now, you're getting 5-6% just to sit in cash. So why not kind of do that if you don't have the allocation to bonds? I'm not saying don't be in stocks. We like stocks, but I like a lot of different stocks. I like the American Expresses, the Morgan Stanleys, the J&Js that all trade below the market multiple and have higher growth. So there's definitely opportunity out there. I just think the opportunity there is different from what we've seen in the last 10 years. And you can do special situations. I mean, we were just talking Meta before or a Disney. Those are special situation stocks. But I do think valuation is going to be really important going forward. And I think the data is going to show that people need to be focused on that.
What do you think, Sarat, that the S&P, which bounced off its 200-day support level and now back at 40,000 and 40, what is it thinking? What do you think? It's not a thing. It's a thing. It's not a person. It can't think, obviously. But I'm going to continue with this. What's in the back of its mind? Why does it seem to be somewhat comfortable or sanguine about what's going on?
Well, I think the market is also looking through kind of the earnings trough that we're probably going to get in the next couple of quarters. And I think that's going to be really important. So for the longer term, I think the market's is signaling that, hey, we can get through this. We're not going to crash the market itself. But I do think you had some momentum in the last couple of weeks, and you saw kind of the tech stocks, especially Apple, rise in the last couple of days. But I do think the S&P is saying, look, we're not going to go into a very, very hard landing. I think we're going to get a slowdown. And then the market can go look through that, and you can actually make money through it. So it's not selling off like we did,
no, it's not,
three of the last 4 years.
It's not looking around and saying, wow, things are okay now. It's looking around and saying maybe they don't get too bad, and there's another side, there's an end to this. Someday the storm runs out of rain. That's a great country. So we got to go though, Sarat. Give me 15 seconds, but
okay. Thanks, Joe.